You've lived through a lot of market turmoil in your lifetime. How significant do you think this is within the context of 1998 and going back 100 years for Russia?
Oh, I'm going to say something quite controversial in today's climate, but I sympathise with Russia's definition of it being a little bit of a farce. We effectively did have a default in 1998, as Julia outlined perfectly. LTCM almost brought down the financial system. My old employer, Lehman Brothers, was almost brought to the brink, and I think that actually, in fact, the complacency of surviving that crisis is what may have led to some later problems. That's a whole separate conversation. But look, ultimately, this is not a big market story in the short term in terms of the last few months we've been pricing this. I think the big market story around Russian debt happened 3 or 4 months ago. Today is just a technical update.
It's a technical update. I wonder what it tells us as well about the fragility or not of the Russian economy and how well it has weathered the sanctions that have been imposed from the West as we look ahead to the G7 meeting later today.
I think that's a great question. In fact, I was having a big debate with a hedge fund manager about this over the weekend, about, like, you know, how the sanctions have worked in Russia. Look, I think ultimately the sanctions are causing immense damage to the Russian economy for the longer term. However, they are still seeming to sell more oil and gas to Asia than was expected a little while ago. And I think that's also affecting the energy markets overall. I think this is the idea that Russian oil supply is going to come off the market. No, it's just getting mostly redirected. Yes, some of it's coming off the market, but there are still hungry buyers in China and India, the world's 2 biggest importers of oil.
I wonder if that dynamic's going to come to play for gold as well, because there's some suggestion they're going to look at banning Russian gold. Is that actually going to be effective? Because so far on that point, oil hasn't really played out as many may have expected.
I think that the gold dynamic is a little bit different, but I do think it's very interesting. I think the price action in gold, to that confirmation that some of the G7 countries are going to ban imports of gold there for Russia, I think it's quite big news, because gold's, yeah, it's up about 0.5%, but it's pretty tame. Given that we've seen softer yields, softer dollar, that should help gold. Ultimately, I think the next big move in gold is probably for lower later on this year.
What about the broader commodities complex, particularly around industrial metals and the China component here? We've seen a significant drop-off. Are we underplaying the potential for China to kind of come back as a key driver of some of that growth?
That's a great question. I think you're probably right longer term, but again, it's a time span question. At the moment, we're seeing metals trade just terribly at the moment. I think people forget this amongst the commodity boom in the last couple of years, how bad it's been in the last month or so for metals. Copper falling out of bed. In Shanghai contracts, zinc really punished recently, and I think that reflects the fact that we're very concerned about Chinese growth. But you're right, China's made very clear they want to still target that growth target. I think that's crazy they're going to reach it, but therefore the policies they're going to use, the stimulus they're going to use, will probably support metals again later on this year. And I think the longer term structural story for metals remains very good.